Yep.
Welcome to the WTR Small Cap Spotlight Podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-founder and Chief Marketing Officer of Water Tower Research. In today's podcast episode, I'm being joined by Howard Klein, founder of RK Equity, a capital markets advisory firm focused on lithium and other commodities in the critical battery chain used for electric vehicles and utility storage. Howard authors and distributes the Lithium Ion Bull newsletter and co-hosts the Rockstar Channel podcast that attracts investors in North America, Australia, and Europe. Howard also speaks regularly at investment conferences on the disruptive battery metals investment thesis. Also joining us is my WTR equity research colleague, Dmitry Silversteyn. Good morning, gentlemen, and thank you for joining today's podcast.
Thanks for having me.
Thank you, Tim.
Howard, for those listeners that are not familiar with you and RK Equity, please provide a quick overview of your background and RK Equity's business model and how you came to focus on the lithium and other battery metals markets, please.
All right, thanks. I'm a equity salesperson by background in New York, but that was more than 23 years ago. I started RK Equity with Robert Friedland and the Ivanhoe mines in Mongolia as my first client in 2002, helping to kind of like promote, pre-revenue growth, mining companies, juniors, and broaden their audience with institutional investors. And over the years, that morphed. I worked for a couple of subsidiaries of Roberts. One was a gold company called Jinshan Gold Mines. It got bought by the Chinese, and the CEO of that company, Jay Shemalaskis, pivoted to lithium in 2008 or 9 to promote what is today the Thacker Pass project. So I got into lithium 15 years ago. For the first 7 of my 15 years in lithium, I promoted and that project only. And it's a great thing that that's gotten fully funded by the U.S. government and what I call government motors, GM, General Motors. The success of Lithium Americas and had me pivot or had other lithium developers approach us because of the Lithium Ion Bull newsletter that you mentioned, and our podcast. We've just, it's a nascent, very fast growing niche industry that there wasn't a lot of information about. And it's had, 4 booms and busts over these 15 years. We're now in a bust. But I got into lithium, on the back of that and like many, buying into the Tesla, and the EV thematic and seeing what was happening. We just, still see good potential, in lithium, but we've done other metals along the way, nickel, cobalt, graphite, uranium, et cetera.
Great, thank you for that. Lithium is definitely a very dynamic market. I saw SQM was all over the tape yesterday on Bloomberg. I'll now turn the podcast over to Dmitry to ask a few questions.
Great. Thank you, Tim. Howard, battery metal prices, especially lithium, we just talked about that, but also cobalt and nickel and graphite, have seen a pretty precipitous decline in recent quarters, driven by what I would imagine to be a slower uptake of EVs in Europe and the US, as well as customer destocking of the inventories they built during the COVID-related supply chain snags in 2021 and 22. Can you talk about the impact that lower prices on metals have had on the ability of resource developers, as well as smaller producers, to raise capital that's needed to bring projects to production or advance resource development to the next step?
So it's broad. I mean, there is a lot of the public equity financing has dried up substantially, not entirely, but the mantra of commodity equities follow commodity prices, and as commodity prices have fallen, the speculative interest that came into the market, let's say the battery material space, under Biden and the Green New Deal and the IRA, he heavily promoted electric vehicles and other parts of the supply chain, and that dynamic led to a lot of funds flows into clean energy ETFs, and that supported investment into these commodities while those prices were rising. And now the reverse has happened, right? There's been a lot of exit, as you mentioned, a lot of the demand drivers, but also a lot of what happened during COVID was that not a lot of people were visiting China, but China was quietly, very aggressively building out their entire supply chain. And now they're exporting really cheap cars, because they have cheap batteries and they have cheap cathodes, and they figured out how to source more cheaply, nickel, as well as lithium and some of the other commodities. So from a public equity perspective, it's hard to raise money, but there are a lot of private actors that have big balance sheets that are taking long-term views. So Rio Tinto is a private actor, and they've made big acquisition of Arcadium Lithium. And you mentioned, Tim, SQM was on the tape, but Chile was on the tape because Rio Tinto made 2 investments in new Chilean opportunities. So in lithium, you have Rio. On the flip side, you have someone like Sibanye-Stillwater, which was meant to be a partner of a project, Ioneer, in Nevada, but they pulled out because their own, platinum business, has not been doing so well. And then also private actors, you have like Exxon and Equinor and Koch, big balance sheet oil companies that continue to invest in Arkansas and the Smackover for lithium. You have GM as a private actor. As I said, they've invested in Lithium Americas. You have Mitsubishi has invested, LG Energy Solutions and LG Chem used to finance things. A lot of the OEMs have dried up some of their private capital, but again, this could be, as you said, Dmitry, demand driven. And selectively, you've seen some family offices. There's a dichotomy. There's a lot of pessimism here in North America, but out of the Middle East, and Trump was just in the Middle East, there's a lot of money and a lot of interest, in this thematic. And a client of ours, attracted $10 million investment from a Israeli family office. So there is some private capital. It is selective, but broadly, until commodity prices start rising, the speculative flows into the space is probably going to be slow for battery materials. But uranium stocks seem to have gotten a bid on the executive order yesterday or last week. The metals company, a company you guys cover, on an executive order on seafloor mining, they just attracted $37 million in private capital. So money is available. But it's very, I think, going to be company specific as opposed to thematic specific as it was a couple of years ago.
Thanks, Howard. So you mentioned that as metal prices go, so do the valuation of mining companies and processing companies. So obviously right now, especially the juniors, don't really have the equity, if you will, to raise capital without diluting their shareholders significantly. So is there a light at the end of a pricing downturn tunnel here? And what are other, funding avenues companies exploring? You talked about strategics and looking for sort of partnerships and offtake agreements. But what else can companies do at this point, given that they can't use their equity to raise money with the prices being depressed?
Well, like I said, some people can raise money at these low valuations, and there's an Argentina brine company that has raised equity 6 times in the past 18 months at lower and lower prices. So if you want to advance your projects, you can through equity, but where a lot in the lithium space and other spaces is just like conserving cash and waiting for hopefully the demand surge to overtake the oversupply that we have in a lot of those commodities. And look, we have a new administration in place. They're passing a lot of executive orders, but the past administration with the Loan Programs Office at the Department of Energy, provided a lot of low interest capital, and then there was the Defense Department, that's provided grants and some other types of funding. So there's been mixed messages out of the Trump administration. I think he said he's like going to pause, for 60 or 90 days, all grants and loans and evaluate, what Biden did. So some of those projects that got those somewhat, uncertain about. On the other hand, Chris Wright I think confirmed a nuclear a nuclear loan guarantee, and he's been advocating, to continue the loan programs office, but also want to make it available for coal. You have the budget reconciliation process underway, so we don't know where the IRA subsidies and, they're looking for cuts, right? So it's not clear. Right now, if you're a junior or a developer, there's a huge amount of uncertainty at present because they're dealing with a bunch of new personnel. Tesla and Doge cut a bunch of people from the Department of Energy, so it's a bit in flux. But like I said, companies like that have already gotten funded and or have grants going. There's the Talon Metals and in nickel. I think they have a Department of Defense grant. So that money keeps flowing. I don't know. There are royalty providers that are out there that have selectively gotten in this space. So yeah, I don't. There's no easy answer for this of what alternative sources are available. There's a lot of uncertainty, and I think we'll have a bit more. The positive is Trump definitely recognizes, and the administration definitely recognizes the need to onshore, decoupled to a degree with China on a lot of critical minerals. But which critical minerals is he focusing on? In the energy dominance, we think about batteries as energy, but he's promoting a lot, LNG. He likes nuclear. He's talked positively about geothermal. Obviously, other oil and gas he likes, but I haven't heard him talk so much about batteries or lithium or nickel. He's talking about rare earths, right? So again, certain company rare earths has done well. I think your rare earth project, you can get more funding easily. Uranium projects, I think we'll be able to get more funding, right now, but things could change. For lithium and other materials, but it will be kind of government policy driven to some degree that will impact certain stocks. So you need to follow the policy and which companies are going to benefit by being anointed, by the administration as a company, worthy of attention.
Got it. Thank you, Howard. Clearly, developing domestic resources of critical metals is a priority for this administration. As you mentioned, under the Biden, we had a variety of loan programs that you referred to and grant programs. In talking to some of the junior companies in the space who were looking at those, not everybody was able to take advantage of it. I guess I think there were a lot of strings attached, if you will, to those loans and grants. But this administration, as well as market participants, are definitely looking at critical metals as a priority. However, mines alone aren't going to do it. It seems to me a whole ecosystem of mines and refineries and processing plants is needed to make America truly self-sufficient when it comes to the energy transition trends away from fossil fuels. So, what do you think needs to happen beyond the executive orders, both from a legislative as well as perhaps regulatory and funding perspective, to stimulate the development of domestic resources, as well as manufacturing infrastructure in the U.S.?
I'm hoping that there's some grand bargain with China that is, basically says, China, stimulate your domestic economy for consumption, but also welcome if you build cars, batteries, cathodes, and processing facilities in America, you'd be welcome, right? Like Trump is welcoming in billions of dollars of investment from every other country in the world. Why not welcome it from the country who is ahead of us, has a world, lead in a lot of these, China is energy dominant in clean energy technologies, right? So and it's not a climate thing, really. It's these are just industries of the future. And where a lot of their technology emanated, was found in America and then was just commercialized over there. So if we could kind of re-commercialize that, I mean, that's what I really hope that happens, because then it would greatly stimulate. We'd be able to catch up, across, the battery supply chain, and battery plus solar, as an energy source, according to Next Era Energy, the largest utility in America, is the fastest and cheapest way to deploy electricity, in America. Like nuclear and gas plants, have long bottlenecks. And so, China's great, with solar. We just have to kind of get the cost even further down. But I think, but I don't know if that's going to happen. I flip a coin 50-50. Like, it's very hard to predict. But, I see a grand bargain between the US and China, and attracting FDI into America in this space as being, you ask what's needed, that would be great. The LG Chems and the Koreans and the Japanese, like Panasonic and SK Innovation, that are building battery plants in America, that's good. Not enough cathode is being built here, but LG, I think Chem, or LG Energy Solutions, as well as Redwood Materials, is developing cathode. But when we're talking about battery materials, it really continues to be a bit policy driven, and the policy, direction is murky at best, based on what we're hearing, out of the Trump administration. As it pertains to other critical minerals, they're very focused, things that go into robots, defense, data centers. Again, Google, has, signed a deal, with Elemental, for, to build 3 nuclear plants, potentially, right? So, can you see the hyperscalers, Google, Meta, Tesla, et cetera, Stargate, start funding, projects, across the renewables plus battery supply chain? Maybe. We shall see, but so far they've been loath to do that. Only GM has, what should happen is like what happens in China. You have CATL and BYD investing all the way upstream. In America, you have GM have done that. They've taken an equity interest in a lithium mine, and they've partnered with MP Materials and a few other companies. So I think you need to see more of that. But the auto companies don't have big balance sheets. The hyperscalers, the tech companies have gigantic balance sheets. So will we see, a Google or a Meta, or any of these companies investing in the battery supply chain investments as they are starting to do in nuclear? I don't know, but that would be great if they did.
Thank you for that, Howard. Before we can you please highlight for our audience some of the more promising North American projects that can benefit from government's focus on critical metals and processing industries, as well as the improved funding opportunities hopefully implied in the executive order? You mentioned a couple, Thacker Pass, obviously, Lithium Americas is one of them, but what other projects in North America, specifically in the US, but also in Canada, that you think can be beneficiaries in the near term, from some of these developments?
In nickel, I think Talon Metals, can benefit. As we've discussed, the metals company is definitely very promising. That's, offshore in the US. So those 2 projects, I think, should benefit. In lithium, the Loan Programs Office did Thacker Pass. They also did Ioneer, and they also did Energy Source Minerals in the Salton Sea. So Jigar Shah and his team, kind of voted for those projects. Will they get funded? We shall see. Canada has a lot of promising projects in both Quebec and in Ontario, and some of them have attracted some private capital. Like the Biden administration had a friend-shoring policy. Trump wants to acquire Canada. Canada just had an election. I don't know how all of that's going to play out, but there are a lot of attractive, large-scale, high-grade, plain vanilla, spodumene mines in those countries and like Rio Tinto and Arcadium are building a conversion plant. I mean, you want to be close to kind of conversion. So Tesla's building a hard rock conversion, and Arcadium Rio is building, in Canada. So I think there are some projects there, like in Canada. There's Winsome Resources, there's Q2 Metals, there's Patriot, but the Sayona Piedmont, once that merges, that could potentially supply. That's already a Tesla supplier, but that also could potentially supply the Bécancour facility that Rio is inheriting from Arcadium. So I think those are interesting projects. And then they're earlier stage. If you look at it, the U.S. government has funded 2 sediment projects, which are unconventional. There may be, like the company you just interviewed, Jindalee or Surge, battery metals, or Century Lithium, are 3 other sediment projects that may follow in Lithium Americas and Ioneer's footsteps over the years. What's happening in the Smackover? I mentioned Equinor with Standard Lithium, Exxon. It's still, I'm uncertain. They got the balance sheets to do it. But the CapEx for DLE projects that have been announced globally just keep getting, higher and higher. And I'm of 2 minds. Like Exxon invested 15 years in algae, hundreds of millions of dollars, and then completely abandoned it. So will oil field lithium be like Exxon's algae, or will it be like offshore oil and gas, where they took a very long view, weathered ups and downs of the commodity cycle, and then it became a very significant component of the industry? Jury's out on that. There are very few public ways to play oil field brines. There's many more ways to play, hard rock or sediments. It's also very hard to play the salton sea. So anyway, it's a very interesting landscape. There's a lot of lithium in North America, and if you overlook it and you break it into those buckets, conventional hard rock, sediment, oil field brine, geothermal brine, every one of those projects will say we're the best because of whatever reason. And, but all of the DLE proponents would say that they're, super low cost. It's not yet been proven at all to be low cost. On the OpEx side, it's never been commercially done. But the CapEx numbers are very, very high, right? So, and there's a lot of technical risk associated with that. The mining industry is one place. Every other industry, like if you have first of a kind technology, proprietary IP, that's you get a premium in the market for that. But in mining, never been done before, right? Immediately you get a discount. So conventional hard rock to conventional conversion is where most of the lithium units are coming out of, from Australia to China, outside of, the conventional brines, which we don't really have very many of, in America. So yeah, I've given you kind of like the landscape. It's very difficult, but you also need to follow the politics, like Lithium Americas did a fantastic job lobbying Washington, as did Ioneer, as did Energy Source Minerals. So which companies are navigating Washington, and which politicians are raising their hands saying, I support XYZ project, will help you determine whether or not, that project is going to be blessed with, government support, which will then help private capital be attracted to it.
Great summary. Thank you, Howard.
Great.
My
This
pleasure.
has really been insightful, Howard, in terms of having more of a capital markets view of lithium. So I really appreciate it. So again, thank you for joining us today, Howard Klein, founder of RK Equity, as well as my WTR Equity Research colleague, Dmitry Silversteyn. Finally, a special thanks to the producer and editor of the podcast, WTR colleague Joe Brunetto. Thank you for listening, and don't forget to subscribe as well as visiting www.watertowerresearch.com to stay up to speed on the company's small cap written research reports, podcasts, fireside chats, and conference schedules. We will see you next time for another edition of the WTR Small Cap Spotlight Podcast.